Hey there, everyone. Welcome back to my channel. It's Saturday morning and the shutdown continues. There's not a whole lot to do, so I figured I would just look at my charts. The markets were closed on Friday for Good Friday. That gives us a little extra time to read the charts. I'm seeing some trade setups. I'm seeing some signals that's telling me where the market's heading next, and it gives us a high probability of that actually playing out. So I want to go ahead and go through about 15 different charts, let everyone kind of understand the levels and what I'm seeing, and then hopefully Monday morning, everyone can take action based on their own interpretation of the market. So let's go through these charts, and hopefully I'm able to leave everyone with some trade ideas for Monday and for next week. All right, here we go. So the futures, I don't see a whole lot in the futures. Nasdaq futures, they're just kind of flagging. So that tells me the market wants to go higher. When I look at the flag, doesn't mean it has to, but I see this flagpole, and then we've got this. If I draw it out, maybe something like that, some sort of a flag, which would give you would put our price target up around here. 8,841. Doesn't mean that's going to happen. I don't necessarily see that in other charts, but that's what I see there in the futures. And so we should know Sunday night what's going to happen. Triple Q's moving on. So I kept saying this is a good area probably to short, and that's just because we're up against the major trend line resistance. If I go to like a monthly chart. Here's your bull market trend line right there. And if I zoom right in, let's zoom into like a daily. And that red line right there is the bull market trend line. And we're right there at resistance. So if I go to the hourly, there we are right there. We tagged it twice, tag, and have not been able to jump above it. So what could I see playing out? Well, it could gap higher. That could be the move. It could gap up above this trend line, maybe ramp up just a little bit, trade around, and then fail. I could easily see that happening, and that would be a good fake out, or a good bull trap to recover this major trend line resistance on this bear market rally, and then trade around here just for a little bit and then fail. That would be a good setup. So. It could happen. However, this is resistance. We have not broken it, so you have to respect it. That's basically what, you short at resistance and you get long at support, things like that. So you just got to follow the rules and follow what the chart's telling you. And that's exactly what we're going to do. We also have divergence. You can see RSI divergence right here, down here. And divergence just says, it just tells you that this peak was not as, there wasn't as much enthusiasm or momentum or participation as the last peak. So you have a lower RSI. That just means less momentum on this peak, so less people participating. And so that oftentimes will tell you that there's a reversal coming. And so we've had an uptrend. We're at resistance. We have negative divergence. I think that this is the spot where it should reverse. And again, they could gap up and then fail. But those are the two scenarios I see playing out: either a gap up and a fail, or just fail right here. As of right now, I have to put the highest probability that we just fail right here, because you have to respect resistance. So that's what I think is going to happen there. XLV, this one's interesting. I covered this, I think, in my last video, but this bearish rising wedge here. This is an hourly chart. So we got this nice, clean, bearish rising wedge. Several reactions along that, you can see. And what I'm looking for is to get short this on a breakdown. So what you'd expect to see is either a lot of the times they'll just gap down, and they call it a gap and crap, but it'll gap and then sell off. So maybe that's what we do. Sometimes they'll gap up and you'll see them break above these things and then they fail. You'll gap up and then a nice strong red impulsive failure candle. That's possible as well. But regardless, I'm looking for this thing to fail. So I'm just keeping an eye on it. Negative divergence is intact here on the hourly as well. So we're just waiting for that reversal candle to trigger a trade on this one. So keep an eye on that. XLV. I'm just trying to point out the charts that look interesting to me. I didn't see anything in Apple that looks, we're not at any levels. Microsoft's just kind of flagging right here. You can see this little flag. Didn't really do much. We just kind of popped here and we're just grinding around right at this level for several hourly candles. So, ultimately it is a flag. Could break higher up to, maybe up to 174.50 or possibly 177. If it goes much beyond that, then it just is not, we're just not in a bear market, I would say, because at least for Microsoft, doesn't mean the rest of the indices aren't in a bear market, but I don't see Microsoft going a completely different direction than the rest of the market. So, we're either near the top or these levels right up here are probably what I would call the top. Anything higher than that, we're getting close to all-time highs, and everything's shut down and there's been massive money printing and fundamentally everything's there's unemployment of Great Depression levels. I mean, come on, so I would put, if we were up around these levels, I would put the very, very high probability that this would be the top of this rally, this bear market rally, and then we head lower. But I don't think we're going to get up there. Maybe we get up to 174.50. That would be the level, because you can see we have lots of reactions around that right here and here. So maybe we get up there. But again, it's tough to say that we're even going to get that high. So moving on, let's see what else. This one's interesting. XOM. This is ExxonMobil. So the oil space is battling with they're battling with oversupply and super low demand, but ultimately they've just got so much demand or so little demand that there's been a huge oversupply that came out of nowhere. They were pumping pumping the amount of barrels that they needed for the demand before the virus, and then the virus hit and demand just fell off a cliff because the entire world's economy is just shut down, and there's no, I know personally I've barely been using any gas, and I don't go that many places either, but I'm barely using any gas, even less than I normally do. So factories are shut down, all that. So demand just fell off a cliff, and so they're oversupplied, and so this rally that we've seen, OPEC is trying to cut supply, which they need to reduce the supply to find equilibrium with the demand, but that doesn't mean that the market is going to the stock's going to do great. That the demand is still not there. So that's just the fundamentals. But let's look at the technicals here. Technicals. This is setting up in a bearish rising wedge as well. And so you can see on the lower end, we've got down here is the low, and then we got lots of reactions along this trend line. This is an hourly chart. And then on the top, we start right here, and then we got a reaction here, another one there, another one there. And then I do like to see this for the bearish rising wedge patterns. When they break to the upside and just kind of chop around and don't actually move too far away from the breakout point, that's a fake out usually. That's it's a bear or a bull trap, and so it did do that. We broke to the upside, but it just couldn't. It was just struggling, and you can see here's your breakout, and then even on this candle it started to ramp up and then failed and reversed basically on that day, and then we came up again a little bit, and then nice impulsive recapture candle, recapturing the bear flag. Now we're just trading along the lower range of this support line. I think we break. That's what I'm looking for on this one. I think this one breaks and at least does a gap fill down here at 40 bucks. So that's about $3 down. Here's your gap. But ultimately, possibly, this might have just been the bear market rally and we're going to fail and head lower. So I'm looking for this one as well. I think this is a short coming up here pretty soon as well. Just looking for that break of that bearish rising wedge. So it could come fast. They could even gap it right down to 40 bucks. And then at that level, we probably are going to rally and do a back test and then roll over. So I wouldn't be wanting to just jump on short at 40 bucks. But if I can get short on the break of this support line right here, this trend line, then that's a good area to get short. And then from there, down to 40, you could take some profit at 40, and then look to maybe add back on a back test, or you could just, if you get a good entry point, you can just swing it down, and even if it does a back test, that's an area to potentially add to the short, and then let this thing just roll over and start to head south. So I like this one. I think XOM is set up for a move down, and we're just waiting for that trigger. Moving on, and then just 1 second, checking the divergence. Yeah, don't really have divergence in play there, but all right, so moving on. Walmart. So I am short this one. I shorted this stock right up in here. This is where I got short, and I put it out in a video and said this is an objective area I believe to get short. And let me show you why this level, what I saw on this trade here. This one, you got to go to a daily chart, and I spent some time marking out some of these levels as well. But you've got a bearish rising wedge here. All right, I'm back. Had to do a disk cleanup. I've been having issues with that, and I'm not exactly sure why, but okay, moving on. So anyways, we have a bearish rising wedge in Walmart, big old wedge. It's been there since 2015. Lots of reactions on the lower side, several reactions on the upper side, and then so I saw that we were breaking above right here, and that's a high probability that you'll fail when you're in a bearish position, a bearish chart pattern like a bearish rising wedge. You have a high probability that you'll fail, just like up here, and we already failed once there, failed again there. I figured we'd fail again, so we did. Failed, and now I'm looking for this thing to head south. And really my target is going to be, it depends on how the market's playing out, but if this trades all the way down to the lower support line, then I'm looking for this thing to break eventually, and so we'll have to eyeball it. But let's say we break this 104.25 level, then that's going to set us up for these other levels down here, 91, 81, 72. That's as far as I went on these, but that sets us up for a bear market basically in Walmart. I don't know if we'll get that far, but again, I do think we at least get down to the support line around 105. So we'll just continue to watch it. Costco, this one's kind of doing the same thing. The chart's not as clean on Costco as it is on Walmart, so that's why I pointed out Walmart instead of Costco. Okay, so this one is, I'd say we broke the uptrend. We did a back test probably right here, several back tests. It looks like it wants to fail and head south, so that's just interesting. I'm gonna watch this one, but yeah, the Walmart I think is a better chart. All right, let's pick up the pace here. MGM, we've got casino stocks. Just thought I'd look at them, and look, you've got here's 2009. So this is the bull market in MGM, and basically major resistance right here at at 1679, and you can see we held as resistance right throughout there, and then it was support right through, and then if you move up, you can see we're basically right there. So this kickback rally here has come smack into major resistance. This is probably an opportunity for a short. if it gets back up there. You can see if I move it to the 1 hour candle, we gapped right up into there and just failed and sold off. So the seller stepped in, smashed it down. So if we run up and want to tag it, that's the area, or even overshoot it a little bit, even better. If it overshoots it, then that's the area, that's the best area to get short on that initial overshoot. And then if it works and does fail, then you've got a great position, a great entry position on that short. And if it holds and continues to run higher, you just stop out for a small loss. Win's kind of the same thing. Here you go. There's the major support line, 89.79. We're not quite there. If I zoom in, didn't quite get there. So that one has some more work to do. There's really no trade on this one that I see at this level. Look at the bonds. Bonds are interesting. All of a sudden, bonds sold off really hard and everything got horrible. And then all of a sudden, everybody wanted to buy bonds. Well, I think it's not really everybody. I think it's just the Fed. I think that all this money printing, trillions and trillions of dollars, it's ending up right here in the bond market and then also the corporate bond market. Here's your corporate bonds. This is the Fed. Because the corporations' balance sheets haven't gotten any better. If anything, they've gotten worse. So the bonds have gotten more risky. There's not going to be a demand for bonds with lower interest rates and more risk. So this is the Fed. This is where the Fed's been targeting. All that money, a lot of it has been going to corporate bonds and treasuries. So that's what I see here. This one, I think this is a short right here. It looks to me like this is probably the top. The all-time high of these bonds is right here at 134. So that's crazy that we're that close to the all-time high, and our entire country is shut down. So this is the Fed, and is the Fed going to continue moving these things higher? Because I don't think there's really any buyers of these natural buyers besides the Fed. So, are they trying to pump it to all-time new highs? Maybe. Or it fails right here, and we gap fill and then probably head lower. So to me that looks like a short. All right, let's move on to my gold charts, and I'm not going to go through all my gold charts, but I can cover a couple. All right, so gold's been in a bull market. The bull market continues, and I continue to trade it as such. So buying at support is the mantra in gold and gold miners. And that's that's how we're going to continue to trade it. So here's Barrick Gold. Nice huge up day on Thursday. I think the thing was up 10%. So, and this is my largest position for the most part, my largest core position that I hold. I trade triple Qs, and I do have a sizable position there. But when I'm shorting something, it's not it's not something that you can hold forever. You have to take profit as it comes. So this one is my largest core position, definitely my largest single stock position, and you can believe that I did pretty well on Thursday. Let's just put it that way. And we ramped higher, and look where we came into though. Came right into this resistance line. If I zoom out, here it is right here. See the gap all the way back in April of 2013. There's your gap. And that gap's at 22.72. And you can look as I zoom in, there's where we closed. 22, it's within pennies, 22.50, 22.70. We closed right at the, at that gap. So if this is going to be resistance, then this is where it will hold. But I don't think it's going to be, honestly. When I read this, the reason why I think we're going higher is this big plunge down. This wiped out the weak hands. Let's just put it that way. All the people that were weak and jumped on this trade late, they got smoked. They saw huge losses. I mean, there was a day this thing was down 20%. I mean, big old losses, and it probably shook them out. If they were just on it for the late momentum, and they didn't realize this isn't a bull market, because people that are trading this as a bull market don't buy, they don't get shaken out. They're buying when they at support, and this was down at support here. This is where I added to it, And when you see the big sell-off, you're not worried because you're just coming right down to support. And so because we had this big sell-off, it makes way for the move higher. Anybody who maybe even got short here, they're squeezing out on the way up. So I think that gives us enough momentum to shoot us up to this 28, 27.50 price target. So I think that's where we're heading next. And then we'll probably run into some resistance right up there. But I get that level. You can see going all the way back to 2006 and everything that held as support. Again, we had a reaction right here back in 2013. So I think that's where we're going, is up there to 28. All right, moving on. Newmont's been on a tear. It hit a new 52-week high, I believe, on Friday, and was up. Let's see what that one was up, 13.5%. So Newmont's been doing good. Barrick actually has been outperforming. It's been doing better than Newmont, but it didn't do better on Friday. Newmont did better on Friday. But from the low to the high, Barrick's actually been doing better. It's up about 130%. I think Newmont's up about 100%. But, Newmont's doing good. Looks good. Chart looks good. I'm not going to get too much into it because I trade Barrick. But, again, I did mark out this one trend line right here. So it looks like we're right there at that resistance, or it could be a double top. $58 roughly. Closed right at it. So if we break, we go higher. And if this holds, then we'll struggle a little bit. We might need to build some energy before making a next move higher. It's been pretty impulsive from the low to the high here of this recent sell-off. I mean, that's up 75%. Newmont's up 75% from this area to there in a period of 17 days. So very, very impulsive. That's like a short squeeze basically, but all right, moving on. Agnico Eagle, AEM, riding support. Nice clean support here. And we're heading up towards my profit targets of $53. And we got another one up here around 57. So I think this 53 there's a very, very high probability that we at least tag that. And then this one up here, I think it's a relatively good probability as well. I think we're going to have the momentum to shoot us right up and tag it. And that might be the end of this move. I don't know, but I'll be looking to take some profit. Silver looks a lot like AEM. It's just in a bull, or it's just bouncing off the support line here. This is a daily chart, but you can see it's just bouncing off, moving higher. Looks good so far. So that's all I want to cover. Longer video, but wanted to run through some various charts and trade ideas, give you guys some insight into what I'm seeing. Everyone have a great weekend, and I'll catch you guys on Monday. Bye.